Hello everyone, a very warm welcome to my channel. So in this video we are going to talk about a company called HFCL. So this is a crisp update video, a full-fledged business analysis of this company we have done in the past, and you can find it on my channel. So this company is a very interesting play. They are into communication infrastructure. So this business has use cases in the telecom industry, especially the 5G technology. Then they have also applications in defense and railways. So all these sectors are all sunrise sectors for the next 5 to 10 years, and that's what makes this company interesting for study. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. And if you're not a part of a Telegram channel, do consider joining today, as every day morning before the market opens, I share my view on the market, which will definitely help you manage your portfolios much better. You can find the link of the Telegram channel in the description below. So let's get started. This is the flow of our discussion today. We'll discuss the business model of this company in brief. We'll talk about the stock performance in the last few years. We'll see the main financial parameters of the company. Then we'll discuss why the stock has given the rally. What is the outlook of the management going forward? What is the valuation at present, and whether it is favorable for an investor or not? We'll talk about the risks of investing in this business. We'll talk about the risks of investing in this business and form an overall view of our discussion. So HFCL is a company which provides infrastructure in the communication space. So this equipment which the company manufactures has applications in various industries like telecom, defense, railways, and this company derives close to 90% of their business from the telecom or communication space, around 8% from the defense sector, and just about 3% from the railways. Looking at the requirements which each of this sector has, this proportion can drastically change in this decade. This is a R&D driven company which does their own in-house research, develops their own products, and also does EPC, which is installation of the products which they manufacture. Post installation, they are also into operation and maintenance, but the company's focus now is to move gradually from the EPC space to the product led revenue space. Majorly they aim to go about 70% into the product led revenue, because they feel that the margins in this business are higher than the EPC space. So just for giving you some clarity, these are the products which the company manufactures. One of their main product is optical fiber cables, which has immense use in India as well as abroad. So they sell in India as well as export to other countries. So other than the optical fiber products, they make these products like the telecom equipments, the defense electronic products, connectivity solutions, products used in aerospace. So these are the products which they currently manufacture, and at the same time they are also working on developing certain new products which has many use cases. When you look at the stock performance in the last decade or so, the stock was consolidating for a very long time until the COVID period, which is about 2020. And thereafter, this company came into more limelight as the demand for the communication drastically increased post-COVID. Everybody wanted to get them digitally transformed. People started working from home, and people realized that the need for communication is going to be very high going forward. So that led to the stock coming out of consolidation post-COVID, and it made a high in the range of 90 to 100 in the first rally post-COVID. Thereafter, it started consolidating until very recently it made another breakout and moved towards 120 zone. In terms of revenue, you would not see much growth in the company. They have done about 3,800 crores of revenue in FY20, which is increased to about 4,500 in the trailing 12 months. So in the last 5 years, there hasn't been much growth in the revenue side. When you look at the profit, you also observe a similar trend. It went up from about 493 crores on the EBITDA to about 550 crores in the trailing 12 months. So in terms of financials, when you compare with the run which the stock has given, the financials have not matched that particular growth until now. But going forward, looking at the order book, the company claims that the coming years are bright for the company. When you look at the margins, they are hovering at somewhere around 12 to 13 or 14% range maximum, and they are back to that 12% EBITDA range recently. So what I understand from this business is, although the company is a research driven company, although they are making technical products which are not commonly made or not possible to be made by the other companies so easily, yet it doesn't command any monopolistic position or a very strong moat, because they are unable to charge higher margins from their customers. Maybe some of the products could be exclusive, but on an overall basis, they are unable to charge high margin from their customers. When you look at the return ratios, the ROE is just about 10%, which is not very impressive. And another thing to note is that the promoter holding is just about 37%, and on top of it, close to 17% of it is pledged. When you look at the inventory levels, they are higher than the normal business, and the debtor days are also very high. So that shows that this business has very high working capital requirements, and that's why they have to be efficient in managing their working capital. When you look at the debt, in a longer time frame, the debt has an increasing trend, and right now it's somewhere around 900 crores as on September 2023. And the company has recently raised in 2023 through the QIP route some funds at around 69. Now, in spite of the lack of growth seen in the financials, what made the stock rally so much? The company is into a sunrise sector, and the size of opportunity which this particular sector commands is very high. Defense, railways, as well as the telecom and communication sector, which is related to the internet, has massive size of opportunity in this decade. And the company has won certain orders, some decently sized big orders, which led to a strong order book, and that's why the growth of the future next couple of years is already discounted in the price. What is the growth outlook of the management going forward? In terms of their product portfolio, they will keep doing research and adding new products to their portfolio. In terms of geographical reach, they will further focus on exports and look at exporting to more countries than the present. They will shift their revenue from EPC to product side, and in products also towards higher margin products, so that their margins expand, and the manufacturing capabilities also will be expanded, and there are further capex plans to be done by the company. So these are the broad directions in which the company plans to grow going forward. And when you look at the order book category wise, around the product category has about 450 crores of order book, O&M has about 2000 crores, and the network services, which is the EPC business for the company, has about 5180 crores of order book. So with the order book of somewhere around 7 to 8,000 crores, the future of the company for the next few years looks bright. If you want to understand the split in the order book from the perspective of the government and the private business, the private business is about 1950 crores and the government business is about 5,700 crores. So this is the size of opportunity in the products or sectors in which this company operates. The OFC accessories which this company manufactures have a global market size of about $190 billion. And the 5G products which they make, like the networking products, the RAN products, all these have market sizes of more than $200 billion. So the defense products which this company makes again have a huge size of opportunity. So these are the size of the market which we are discussing globally. Now, how much this company is able to capture domestically and abroad, that depends on how aggressive this company is. So the takeaway from this slide is that the sectors in which the company is operating have a huge size of opportunity. Now, when you look at the valuations historically, in the last 5 years, the stock traded at an average median valuation of somewhere around 27 times their earnings. But due to the recent run up, right now the stock is trading at somewhere around 45 times the earnings, because the growth is yet not reflected in the numbers. So you can observe that the re-rating in the stock is already done, and the growth for the next couple of years is already priced in. Now, what are the risks of investing in this company? If at all the government changes their policy at the macro level, it could have an impact on the business of this company. There are good order books, there are sectors in which this company, there are sunrise sectors in which this company operates, but everything depends on how well this company executes. It's a technology driven company, so they have to continuously upgrade the technology, otherwise there's a technology risk of obsolescence. Then there is competition in this space with the companies in India as well as abroad, so they have to keep up to date. The promoters holding is slightly less than what we normally expect, above 50%, and there is pledge, and a lot depends on how well the company manages their working capital, because otherwise, as they have done recently, they will continuously have to raise funds for their running their business. So after understanding the business model, the valuations, the growth outlook, the numbers of the company, what is our view on the company? At the present valuations, the earnings for the next couple of years, the growth for the next couple of years looks already priced in. So the risk reward doesn't appear to be so favorable for somebody who wants to enter at these levels. But if somebody is holding from the lower levels, they can continue to hold, because the company has a strong order book and the sectors in which the company operates are sunrise sectors. So that's about HFCL. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention those names in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.